We are back with former budget director under President Ronald Reagan, David Stockman, whose new book is Peak Trump. And you are not that optimistic about the economy right now. There's a lot of political headlines out there that people think are going to bring down President Trump, but you think the economy is going to bring him down. How so?
Because he embraced a great, big, fat, ugly bubble that he
told us that what
he
it was.
told us that in November 2016. The stock market, S&P, was at 2140 then. 2 years later, September 20th, it was at 2940, 800 points. And all of a sudden, that ugly bubble became a vindication of the miracles of the Trump economic program. It was a huge rookie mistake. This market has nowhere to go but down. This cycle is at the very end of its expansion. The world, if you look at it, there is headwinds coming everywhere in the world. China's got trouble. Europe is actually tilting over into recession again. Clearly, the German numbers are terrible, and they're the leading edge of the European economy. And we here have a fiscal problem that is utterly out of control at the worst time in the cycle you can imagine. In other words, we're going to borrow, as I said, $1.2 trillion. The Fed is dumping $600 billion. It's $1.8 trillion of bonds, homeless bonds, that will be looking for a home, in the fixed income market, and that is going to cause a real collision, a real shock to the system that will bring the stock market down. The stock market's based on cheap debt, and the era of cheap debt is over. The stock market is based on central banks all over the world buying trillions of paper. That's done. We're now in QT. The Fed is there. The ECB is going there. Even, the Bank of Japan sooner or later has to stop printing. So we're in a different era, and this bubble can't last, and Trump made a terrible mistake embracing it.
So I want to ask about the central banks, because something that Trump has done quite a bit is voice his displeasure with what Jay Powell is doing in terms of raising interest rates. But from where you see what the Fed is doing right now, I mean, they are paring their balance sheet. They have raised rates 4 times in the last year. What do you think the Fed should be doing? What can they do? Because, reading your book, I'm kind of sitting there like, well, what's going to happen? It seems like the only thing that can happen is something very bad. But considering the actual state of play for the Fed, what do you think their policy options are, and how should they be proceeding?
Well, what I think they should do, they're not going to do. We should normalize interest rates. We had 9 years running of negative interest rates in real terms after inflation. In other words, the federal funds rate was below the CPI. That's crazy. It's never happened in history. It's the same thing as telling Wall Street for 8 years running you can roll your carry trades at no cost and just gamble away, speculate away till your heart's content. That was totally wrong. We need to get price discovery back into the money market. Let the markets clear the right interest rate. We don't need the Fed pegging it, by the day and by the week. Secondly, when they expanded their balance sheet from $900 billion, which is where it was on the eve of the crisis, to $4.5 trillion, that was the most radical, crazy monetary experiment in history. No one would even imagine that happening 10 years previously. So they need to shrink their balance sheet quite substantially in order to allow the bond market to actually price supply and demand in an honest way.
So what do you make of the decline in yields we've seen over the last several months as the balance sheet has started to come down?
Well, that's kind of a short-term thing. What I look at is the trend. And interest rates were falling for 30 years, and near the last 5 or 10 years was because of the huge bond buying by the Fed and the other central banks. We touched bottom at 135 on the 10-year right after Brexit, in July 2016. We're now working our way back. It doesn't go in a straight line. It's 280 today. At the beginning of this year, it was in the low 2s. And before that, it was even under 2. But it doesn't make sense to have a bond yield that's barely at the inflation rate for 10-year paper. That's crazy. That defies the laws of economics. There's taxes to pay. There's inflation to cover. There is a return that's needed for taking a risk over a 10-year period. So I think the real yield, if we allowed the market to clear, is more like 4% or 4.5%. The market is priced to bond yields of 2% or 2.5%. The corporations of America have borrowed, like a hand over fist to buy back their own stock. They're now going to pay the price. I might just point out that most of the growth in earnings in the S&P 500 since the last peak, June 2007, is from reduced after-tax interest cost. Went from $50 a share to $20. That was totally unsustainable, and it's going to go the other way.
David, we've just been looking at live pictures from the New York Stock Exchange and the NASDAQ market site, looking like we're going to have 5 straight weeks of the S&P having a positive week. For the Dow today, Intel a big laggard. It was off more than 5%. Apple, meanwhile, up more than 3%. We're in the heart of earnings season here. You've been going through all the things you think that are wrong and which are going to lead us to sort of like an economic calamity. But President Trump thinks he's done a masterful job with the economy. He is the CEO in chief. Okay, hear me out for just a second.
Don't make me laugh.
Okay, but hear me out. He is the CEO in chief, and he has taken this economic expansion that is already near historic levels, making it's maybe going to be the longest ever. He's got unemployment rate at the lowest levels in 50 years, bringing manufacturing back. Has he, I mean, this is what he thinks. Has he done anything in your mind,
true.
Right?
No.
Economically? Really, there's nothing he's done on an economic front that is good?
No,
Not one thing.
Let me answer. Okay, he's a total economic ignoramus. He has no idea what he's doing. He is leading the country into the jaws of a gargantuan fiscal crisis. He basically is starting a trade war and putting tariffs on the U.S. economy that are going to hit his red state voters right between the eyes. They go to Walmart every week and they're going to see the price. I mean, hundreds of billions of increased prices, either directly from the tariff or indirectly. And he's bashing the Fed when they're belatedly trying to do the right thing. So the program is 100% wrong. And he is basically a dangerous man in the Oval Office who is leading the whole system to dysfunction and paralysis. And we're going to have a debt ceiling crisis coming up beginning in March. And I don't see how the system's going to function. In other words, this shutdown that just happened was a totally wasted crisis. The big one is going to happen when they have to raise the debt ceiling, and the Democrats try to put all kinds of stuff on as writers to take back the Trump tax cut and all the rest of it. And I'll tell you what, these people in the stock market are trading by the chart points. These are chart monkeys trading. These aren't really, intelligent, sensible human beings looking at where we're going. Look what happened yesterday. Senator Pocahontas from Massachusetts said we're going to have a 3% wealth tax.
Wait, you're calling her Senator Pocahontas now?
Yeah, sure, of course.
Wait,
why not? Why not? But the point is, the Democrats are going left. They're going to go after, in a populist economics, the wealthy in this bubble for good reasons. The bubble is crazy. It's out of control. The 1% have been living high in the hog. They're going to get theirs. But that means that the stock market is dreaming if it thinks we're heading for good times. We're heading for an economic, financial, and political crisis that we haven't seen in this country since the 30s.
Let's let Julia LaRoche jump in here.
Yeah, so you mentioned something earlier just a moment ago about the trade policy impacting his base. Obviously, like, his base most likely doesn't own the stock market. They're not the ones impacted by the market. But if you're painting this picture of a recession coming, how dire is it? Who's going to feel it the most? Who will be impacted the most?
Well, unfortunately, the innocent people out there in flyover America are going to be impacted, because once the stock market crashes, remember, recessions today are caused by stock market crashes. That's why it came out of nowhere in September 2008. That's why it happened in 2001 when everybody said, this time was different and, the economy had changed forever. So when this stock market rolls over because of the chaos in Washington, the indecision at the Fed, the fact that they're going to try to stick to some kind of shrinking of their balance sheet, the stock market will then, the economy will hit the skids, because the C-suites will start laying off workers. They'll start throwing, assets overboard, liquidating inventories, having big restructuring plans designed to try to get Wall Street to get off their stock price. And that's where we get a recession, and it hits flyover America. So they're going to get hit again. And then they're going to get hit by inflationary costs in their their cost of living because, there isn't going to be any deal with China. There may be an interim deferral of, how they're going to settle things. But these tariffs are going to stay in place, and you're going to have 20%, a 10% tariff on $250 billion worth of goods for a long time to come. And that it will cause an inflationary pickup inflation that'll hurt, the people that he's trying to help.
Well, if you're looking for a book to keep you up at night,
yeah.
David Stockman's book is called Peak Trump, The Undrainable Swamp and the Fantasy of MAGA. Thank you so much for coming and talking with us about what you think from where you sit of where this economy and market are headed. Good to see you.